welcome to episode 2 of Mortgage Unlocked. Today, again, we're here to just go through a few questions to help anyone out there who is in the process of buying or considering buying. The last time we did not introduce ourselves properly, so today we're gonna do that first. Isaiah, go ahead.
Yeah, hi, I'm Isaiah Philo. I am from First Priority Mortgage, and you are?
I am Judith Duncan, and I am from, where am I from?
Howard Hannah.
I'm Judith Duncan Christie, and I'm from Howard Hannah in Saratoga and United Real Estate in New Jersey.
Mm-hmm.
Okay. All right, so today we're going to talk about FHA loans versus conventional. What is conventional financing?
What is conventional? So conventional financing, generally speaking, we're talking about conforming loans. So conventional conforming loans, there's a lot of different variations to that word conventional. But a conventional conforming loan is what most people think of when they think of a mortgage. It is between anywhere from 3 to infinite amount percent down. So you can start as low as 3, but you can go as high as you want with your percent down. It's just a normal everyday mortgage. There's 2 different larger banks that do them. The Fannie Mae and Freddie Mac are the 2 kind of larger entities that oversee the conventional financing for conforming mortgages. And it's just your average run-of-the-mill mortgage. You usually want your credit to be above probably a 660 or higher. You need to have a little bit more money than you would otherwise if you're going to go with what we're going to talk about after this, which is either an FHA or a VA loan. You need a little bit more money down for conventional, generally speaking, than you do for the others. But it's a wonderful option, and there's a million different variants of a conventional financing.
So what is FHA loan?
An FHA loan is a loan put out by the Federal Housing Administration. An FHA loan will allow you to put as little as 3.5% down, but you're also able to roll in much of the closing costs, or a majority of them, because you're able to roll in 6% of the purchase price into the loan to cover the closing costs. You always have to put at least 3.5% down, but you can cover pretty much all of the closing costs oftentimes with the seller concessions being rolled into the loan with an FHA loan. And the big benefits of an FHA loan, not just the money down, but also maybe you're young and you're just starting out building your credit, or you've had some hard times in the past and maybe it hurt your credit. FHA is lenient when it comes to your credit score. You can go as low as a 580 sometimes, maybe even lower than a 580, depending on the situation and how much money you have to put down. But it's much more lenient than conventional financing with things like your credit score.
Well, with the conventional, you mentioned the credit.
Mm-hmm.
Your credit has to be higher
Yep.
than conventional.
Than an FHA and than a VA for that matter.
What's the difference with the VA?
VA is much more like an FHA loan. A VA loan is Veterans Administration. You have to be a veteran. You have to be in the military or have been in the military to qualify for a VA loan. But a VA loan, you can do as low as 0% down, and you can roll in all of the closing costs into the loan. So you can literally purchase a house and come to the closing table without bringing any money. And it's a wonderful benefit. It's a wonderful benefit to our veterans. It's a wonderful service to them. It's very helpful to be able to come to the closing table with nothing and have really excellent interest rates and things of that nature for VA.
So do they need a credit score? Like, do they have that same credit score restriction?
Say VA is very similar when it comes to credit scores to an FHA loan. It might not go as low as an FHA loan, but it's pretty close.
Okay.
Much lower than conventional financing.
and the interest rate, the
Mhm.
difference between the VA, conventional VA and FHA, interest rate, the lower the score, is it the higher the interest rate?
No,
How
yeah.
does that work?
So the lower you, with any financing, your credit score, the lower your credit score is, the higher, generally speaking, the higher your interest rate is going to be. That's especially true when it comes to conventional financing, but it is true with FHA and VA. You will end up paying more, generally speaking, if your credit score is lower.
Okay, so the difference, if someone may qualify for FHA but not conventional
Mhm.
because their credit score is low, or
Correct.
because of their income, or the income doesn't matter, it's just
Income matters as well. So, yeah, it might just be because their credit score is low, but also FHA, when you look at it in comparison to a conventional loan, FHA loans have looser looser rules when it comes to your debt to income ratio. So when I'm doing an FHA loan, I can push someone's debt to income ratio, which is all their monthly debts and the housing payment that we're proposing in the mortgage, divided by their monthly income. That gives you your debt to income ratio. A debt to income ratio can be much higher, generally speaking, with an FHA loan and a VA loan than it can be with conventional. Conventional, the limit typically is about 50%. So 50% of your debts going, or 50% of your income going straight to debts. That's the limit for conventional financing. Whereas FHA and VA can push upwards of 55% to even 57% debt to income ratio. So that's another benefit of the VA and the FHA loans.
Okay, let's talk about the appraisal process.
Yeah.
What's the difference between appraisal for both loans,
Mhm.
VA,
So
FHA?
FHA and VA, when it comes to the appraisal, are very similar.
Right.
You're going to see similar guidelines where if the appraiser goes in there and there's chipping paint, like a wall needs to be painted on the outside of the house or wherever, the appraiser is going to say, hey, this needs to be painted before we can close it. Or if it's missing a railing going down some stairs, the appraiser will usually say it needs a railing. Things of that nature. Or cracked window, things of that nature. They're a little bit more picky when it comes to the appraisal, and a little bit more than conventional financing, which typically it's only a health and safety issue that can cause an issue with the appraisal with conventional financing. So they're a lot looser with the appraisal. So that is a benefit of going conventional, is the appraisal is looser.
And that's the only major benefit? What about the PMI?
Yeah, so VA loans do not have PMI, but they do have what's called a funding fee. Sometimes some veterans are exempt from the funding fee. FHA has PMI, private mortgage insurance, throughout the life of the loan, so you never get rid of it. Whereas conventional financing has mortgage insurance, which is kind of the same thing, but you only have mortgage insurance up to, or only need mortgage insurance up to 80% loan to value, and it drops off automatically at 78% loan to value. So eventually you get rid of that and your payment becomes lower because you get rid of the mortgage insurance. Or if you just put 20% down right off the bat with conventional financing, typically it just gets rid of the mortgage insurance, so it lowers your payment, which is one of the other major benefits of conventional financing.
Alrighty. Alright, VA loan, some people think it's harder to close, is it?
Oh, no. Not typically. I mean, there's the requirements with the appraisal that we just talked about, that sometimes that can come up. But as long as you know what you're getting into and the realtor knows what they're getting into, that can often be taken care of ahead of time, so it makes it smoother. But VA loans close, in my experience, pretty much just as quickly as a conventional loan. I've closed VA, or gotten cleared to close on VA loans in as low as 12, 13 days. My record from submission to clear to close for conventional financing is 6 days, which is crazy fast.
Yeah.
But that was an exceptional, that was a different scenario. So it was a special scenario that allowed for that.
Mm-hmm.
But either way, it's about the same in terms of time to close. Sometimes if there's certain things with the VA loan that might make things go a little bit longer, like the appraisal, or maybe they have a well, so they need a well test because the appraiser says there's a well on the for the property. But generally speaking, they close just as quickly.
Okay. What is the biggest misconception that sellers have about the FHA and the VA loans?
I think the biggest misconception is just that they think that it's like it's going to be much more of a hassle, or that's going to fall apart, or maybe they see a VA loan and they think, oh, they just have no money to put down and that's why they're going with the VA loan. But that's not always the case. Sometimes it's just a veteran that wants to exercise the benefit that they worked hard to receive.
Exactly.
They just want to take advantage of their benefits.
And if you can keep all your money in your pocket and get the mortgage to cover everything, why not?
Yeah, sometimes. So that's a misconception right there, because people are like, oh, it's a VA loan, they just don't have any money. No, they might have plenty of money to put down, but they don't want to use it. They don't need to, and they don't want to. They serve to this country, and they want to take advantage of the benefits. One of the benefits of doing that.
Use that money to buy the furniture.
Right, exactly.
Or
build an addition on the house, or a new car. Yeah. So.
Okay.
Yeah, the new furniture.
Yes, we're back at it. The financing, it doesn't determine the strength of the buyer?
Not necessarily, no. Sometimes it all depends on the situation and the reasoning for the FHA loan, because sometimes FHA loan could show that they're not a strong buyer, but it could just be that maybe they just went through a divorce and it hurt their credit, because sometimes that happens during a divorce. Things get missed or whatever, so they need to go with an FHA loan. They might be a perfectly strong buyer with great work history, great everything, but they felt for whatever reason they needed to go FHA. So it's not a knock on them necessarily, it's just their circumstances, and that would maybe FHA was just the one that gave them the best interest rate at the time. That does happen. Sometimes it's cheaper to go FHA than conventional. So there's a lot of different reasons. It doesn't necessarily mean that it's less desirable for the seller to take, from a seller's perspective.
Right. Can different loan types have different property condition requirements?
Yep. Yeah. Like I said before, conventional loans are much more lenient when it comes to the everything to do with the appraisal than a VA or FHA loan. So VA or FHA is kind of all in the eyes of the beholder with it when it comes to the appraisal. If they say that this wall needs to be scraped and painted, then you have to do the work that the appraiser says.
Right. And the FHA also has the fixer-upper 203K.
203K loans. And there's different types of conventional rehab loans as well. Rehab loans, but the most common one is the FHA 203K loan, which is, it's a rehab loan. The bank, there's a lot of different hoops to jump through, but it's a way to purchase a house and then fix it up to meet the standards, and then you own the house.
Right, so you won't go through that whole process of the appraiser asking the seller to fix everything before you can close, because it mitigates that whole process.
All that stuff gets fixed in the process.
Right, so that's another way to go instead of the conventional that's not so stringent when it comes to the appraisal. You can always do, if possible,
a 203K loan. Yep.
There are additional paperwork and stuff to it, but it is an option.
There's a lot more to it, but it is definitely an option. It's a good option sometimes.
Yeah, I've done that a few times and it worked out fine for my buyers. Alright, so if a seller gets a conventional and the FHA, how should they compare to know? Is there a way for them to know which one is stronger?
I think they need to, one, take a look at the house that they're selling. Is the house gonna present any issues in an FHA appraisal? If not, then there's really no reason. I mean, then at that point you kind of go with, okay, which one's higher, which one's gonna close faster, or things of that nature. Not necessarily, you don't have to worry so much about FHA versus conventional with the appraisal and things of that nature, because the house is it doesn't have any chipping paint, or it's not missing railing. It'll pass. So at that point, you can kind of just look at it in terms of like, okay, these people are saying they can close in this amount of time. These people, maybe the conventional people have to sell a house in order to buy, and the FHA do not. So then the FHA is probably the stronger buyer. So it all depends on the situation at that point.
And that's where the agent should come in
Yes.
to help to figure that part out.
Put them side by side, explain the benefits of each one, or downsides to each one.
Right. So higher is not always better. There's a lot to it.
There's a lot
more than just higher is best.
Maybe one has inspections and the other one doesn't, or one has inspections with a higher threshold, which you could probably explain that better than me than the other one. You know, there's a lot to consider. It's not just which one's higher, which one's lower.
Right. Because some people will give up their the right to the inspection,
Mm-hmm.
and some will just say, "I'll take it as is."
Yep.
And then that too is an issue. I never encourage people to give up their inspection because anything can show up.
Mm-hmm.
Alrighty, so that's those for today, and we'll see you in the next one.
Bye, guys.
Bye.